Hello everyone, welcome back to Lab4crypto. I'm making this emergency video because Bitcoin dipped to around 50K today after the Japan stock market crash, which then it followed a cascade of liquidations in various markets. And that is why we are seeing this drop today. A lot of people, you ask me how I was able to envision that, and the truth is no one could predict exactly when that is going to happen, but I was anticipating and drop, and you will be able to verify that as well for people that are new. You will see on the July 30th, I was published this article in Twitter explaining that I could see Bitcoin forming a lower low. And I explained that scenario in detail also in a blog spot, which I explain in detail how I was able to come to this conclusion. And you will see the article, which it's about 5 minutes read, but I think it's worth it for everyone to read because actually capture exactly what happened today, but also it gave some hope why I believe that when that is going to occur, this drop, I am expecting basically a huge upside for risky assets in 2025. And I outlined some reasons here. But let's first see how I came to that conclusion, and then what actually I'm doing when we actually reached that point. And with not many graphs and maths, I will explain you first how basically I am anticipating the market to react and what also the Fed are about to do in the September meeting that everybody is going to be waiting now because it's going to be crucial. But first, when I saw the 2019 and I studied what happened for Bitcoin in 2019, and the reason was that was the only time that actually Bitcoin had a scenario which it had rate cuts. You will see that Bitcoin local top was a month before the first rate cut, and then Bitcoin was dropping down. Then we had one, two, three lower lows. We had one more, which was the COVID crash, but I'm not encompassing that into my analysis because that was a black swan event, was the pandemic. And I think that we're not going to get something like that. But the reason that this is happening is because the three lower lows, and of course the market can shift a couple of months uh, behind or forward regarding the drops and the upsides because in different years you have different news which they can affect the short-term movement of an asset, but in the end the general trend is the same. But let's see something important first to explain in short what just happened, but I have a video which I published explaining this scenario in detail actually, and that was 6 days ago when Bitcoin was actually at 69K when I made this video, where I was anticipating this drop. But let's move to today's information. The market, when you have the announcement of rate cuts from a superpower in economic perspective, which is US, the market first is thinking, okay, if the Fed are ready to reduce the rates, is because they think that first they managed to tame inflation, or if they think that they have over tightened the economic uh, cycle, and therefore they want to start to loosen their policy and allow the market to start running again. And when I'm saying market, I'm also speaking about businesses, about retail investors, which basically they are they are very interested regarding interest rates because it's the tool that the Fed has to tighten and also do a quantitative easing on the market alongside some other methods that I explain in detail on the blog, and I will have it below in the YouTube channel because I think it's worth reading. But I will tell you the important points. When the market, when the Fed are starting to see that they have uh, done their job, they don't know exactly if they managed to do it well, and therefore the market is saying, okay, If the Fed did not did a good job and they have over tightened the economic cycle, that means that we can enter a recession. And therefore, the market could go even more down, as you see what happened in 2019. And then when the end of the rate cuts occur and the market feels more comfortable, and it's not only that, the reason that the market then goes to higher values. And if you see with just a line, you will see that the market went from 4.5K in Bitcoin all the way up to 67 the last time when we had the end of the rate cuts. And the reason is when you have huge amount of capital, what you want to do is first you need to put your money at work and then also uh, have a return which is greater than inflation. When the Fed are going to reduce the interest rates, that means someone that has capital available needs to put it in places which is going to earn more money than inflation. Let's imagine that the Fed will reduce in the next months the interest rates back to 2%. Therefore, someone wants to put his money somewhere which he can earn more than 2% because the risk-free rate is going to be 2 or 3%. But if you can put it to an index fund or Bitcoin or somewhere which you did your research and believe it can earn more than that amount, then you're going to deploy your capital to this place. So first, step one, you protect your capital, and that's why you see people like Warren Buffett, for example, which he sold 50% of his Apple stock, anticipating, I guess, that the market will react the same as it always does. They are going to wait to see if the Fed actually did a good job, managed to tame inflation. They're going to start reducing the interest rate. They are going to boost global liquidity. They're going to start the quantitative easing and therefore allow the business cycle and the economic cycle to thrive in 2025, and then deploy capital. So the job that someone has now is, if he didn't prepare for this scenario, he needs to think, or she, that, okay, the market is dropped 20 or 30%. If you're anticipating another 20 or 30%, of course, you're going to protect your capital. But if you think that we have reached values close to the bottom, the local bottom at least, for the market, then you're starting to do your research and find the companies, if you are in stock or in crypto, the assets which you are going to have an exposure to the market for the upside, but also protect your capital for a downside risk. The reason that I'm speaking a lot about Bitcoin and not altcoins lately is because the asset that does this work for me is Bitcoin. I'm exposed to the upside if Bitcoin reaches the 50 to 54K, which it did. That's why I wrote the article for people to wait and accumulate at that point, because I said this is going to be our last chance when this crash is going to occur, in my opinion at least. But of course, the markets are dynamic and you need to constantly exploring the possibilities. But at least what I'm seeing and what I saw, what I said to this video is that I was expecting Bitcoin to form a lower low, which is what happened. You will see I had the two arrows, and now hopefully the third will be in place. Let's, the article, the arrow will be here. So you'll see that the next one will be here. Sorry. So the second was this one, and now this is the third. For me, I was expecting Bitcoin to close the the week above 50K to feel more comfortable that the market digested what happened and start to see a bounce around this level. But if we zoom, we'll see that we had even a week close to 49.8. If we zoom, let's see. No, it was even lower. Just a moment. Yeah, 49.9. That is depending anyway on your exchange. But the main idea is that Bitcoin reached that level, which I was expecting. And therefore, that is why I decided to deploy some capital to Bitcoin. But of course, it's not financial advice. Is this what I did? And a lot of you ask me about altcoins. And what I'm saying about altcoins is that you're going to have always time to deploy capital to altcoins because Bitcoin needs to start the crypto bull run, and then altcoins will follow. If you have capital that you want to deploy, it's better to do it on BTC first, take the upside, and then you can go to altcoins if you want. But I don't find a logical reason to deploy now in something which is riskier than Bitcoin with the hope that it's going to go up instead of have exposure to the market with BTC and then rotate to altcoins. Of course, if you did your research, excuse me, in a certain altcoin and you feel that it's the price levels that you are expecting, that is okay by me. But because a lot of people ask me what I'm doing, the only two assets that I feel are really strong now, it's BTC and SOL from quantitative side, let's say from math perspective. Um, so to close up my thought on this is that I believe the market is going to do a 50%. There's a high chance also if you see the rate cuts um, probabilities, you will see that the markets are anticipating a 50 basis point rate cut in September because of this drop. And the only tool that the Fed has to increase the economic activity is to reduce the interest rate. So people from mortgage and loans, they will have some capital released and therefore be able to spend it. Also, to uh, the the usual quantitative easing, which you'll see. Sorry, just a moment. So and I'm going to quote what I said in the article so you understand. Central banks around the world are expected to engage in quantitative easing, purchasing long-term securities to increase the money supply, lower interest rates, and stimulate economic activity. This influx of liquidity generally boosts asset prices, including Bitcoin, as investors seek higher returns in a low interest rate environment. Basically, is what I said before, but it's better articulated in the article. I think it's important for you to have a read and make a strategy to prepare in that scenario. Because imagine that someone like Warren Buffett, for example, which has a lot of cash sitting around, he has to put it somewhere. And for you, is as a retail investor, let's say, which you are not a hedge fund or someone that has 10 people working every day to identify where they will put their money, is to find places which you feel comfortable putting your money that they're going to earn a return which is greater than the interest rate of a bank. Personally, Bitcoin actually is following a trajectory that it follows for the past 14 years. And personally, I believe that Bitcoin in 2025 could reach prices which are, let's imagine that the top of Bitcoin will be in July. My projection at least will be Bitcoin could reach prices around 184K when that time occurs. Of course, if you believe that the the market top will be later in the year, in the end of 2025, could be at values of, let's go to December 2025, can reach values closest to 209K. And to sum up, your job now is to cut down, do your research, find the companies or assets that you believe are going to do well in a quantitative easing scenario. Usually risky assets are doing a good job in that environment, and that is stocks and also crypto. But in that 2, 3, 4 months time frame is where I think the market is going to breathe a little bit and decide if actually Fed are going to continue to do what they have doing for the many years, reduce the rate cuts more aggressively, prepare their quantitative easing um, method, which basically, as I said, is to do all these steps that I had in the article. And when the market is sure that this is the way, which I think there is no other way anyway, but we will see, then the risky assets will do well. So don't screw this up. Do your research now, because these opportunities are not coming very often for investors. And when there is blood in the streets, you need to start thinking that it's a good time for you then to accumulate if you did your research, because when everyone is fearful, you need to start deploying capital where you feel that it's good for your risk tolerance. And that is why we have thousands of charts that they are updated every day to help us manage our risk and make informed decisions in the crypto sector. But of course, if you are in the stock market, you can do that in sites which they can give you all this data and information to make these informed decisions. Because do not do any decision making based on something that you saw on Twitter. When I made this post, that is why today I posted this. Everyone was thinking that I was crazy and the altcoin season is in, and in August low caps will do amazing. And they completely ignored that serious money, they need to first reduce their risk when you have the first rate cut, because they want to be sure that the biggest economy in the world are not going to enter a recession. So you protect your capital and then you deploy it. But unfortunately, to get clicks and make a video which is more interesting to people, you need to say things that people want to hear. But I'm not here to tell you what you want to hear. I'm here to tell you what I see on the charts and what basically I am doing to navigate the market using, as I said, more than 1,000 charts every day. I hope you liked the video, and until next time, bye-bye. And do not forget to give us a thumbs up and leave a comment, as that helps the algorithm to show our content to more people and help more people see our content and prepare for 2025. Bye-bye.